Hi, I'm Ryan Lehman, iCM's Director of Investments. Welcome to our Quick Hits video on iCM's tactical ESG strategies. At iCM, our approach begins with a valuation-based philosophy that focuses on quantifying relationships across asset classes and identifying those assets where valuations have stretched to unsustainable levels. So why follow a value-based philosophy? Well, there are two basic reasons. So first, when valuations expand or contract, they impact returns over 5 to 10-year periods. And studying data from the last century, we know that the average equity market return is around 10%. However, where you start from matters. When markets are least expensive, your average return is very good, around 15%. However, when markets are most expensive, the average return is only about 5% per year. Following valuations not only provides the opportunity for higher returns, but it also increases your chances of success. Low valuations have a near 90% chance of achieving above average returns, while the highest valuations offer a probability of just around 10%. Now, how does this apply to ESG portfolio management? Well, at iCM, we use our valuations-based philosophy and process to overcome some of the historical shortcomings in ESG investing. The most important drawback being the idea that investors have historically been required to sacrifice returns in order to align their social and their financial goals. This has largely been the result of two factors. So first, ESG strategies have historically embedded potentially unwanted biases into investor portfolios, whether it be in terms of geography, market cap, style, or sector allocations. And then second, until recently, product availability was relatively limited, leaving investors with funds that generally focused on broad asset classes, which really limited the ability of an asset allocator to add value. And as a kicker, most of these funds were higher fee, actively managed mutual funds. Now, fast forward to just the last few years or so, and the industry has done a really good job of solving our second issue for us. ETF providers have launched a wide variety of new funds that not only come at relatively low fees, but also span the geographic, market cap, as well as the style spectrum. And this is where our valuations-driven process really comes into play. We utilize these ESG-focused ETFs in an effort to essentially mirror the global asset allocation decisions of our traditional ETF and mutual fund portfolios, allowing those tactical allocation decisions to drive an investor's relative performance rather than any of those unintended biases. The end result is a suite of broadly diversified ETF strategies that not only express iCM's global tactical asset allocation decisions, but does so in a cost-effective manner, all while helping investors better align their social and environmental goals with their investment goals. So that brings me to the end of our quick hits video for iCM's tactical ESG strategies. For a more detailed overview, please feel free to reach out to a member of our advisor support team at 888-426-4689 or email us at info@icm-invest.com. Thanks again for your time.